How can we mimic Brazil?
Well, one, there is a push, I will tell you, to get us to have a U.S. group go down to Mexico to find out what they're doing and how they're doing it, and whether or not they're getting some subsidies that are unfair to the U.S. sector, say in farm machinery purchases and things like that. That's one thing. We have to really get our people down there to study it, okay? And I think that will happen, by the way. I think the Ag Committee is looking at funding that. What we could also do is see what they're doing relative to their recent announcements to increase their fertilizer production domestically, because they're beholding like the U.S. side. Now, we can do some tax incentives. I think it's going to take additional tax incentives, permitting, and that's why this administration is really good on permitting. Doug Burgum from North Dakota, former governor, his task by President Trump has been to accelerate permitting. And that would go a long ways for investors in the U.S. to say, okay, maybe I won't have to wait as long as I thought if I put millions of dollars into a new fertilizer plant in the U.S. So that's another area. The third one is to always improvements in transportation to become more efficient in the export arena, and throughout the domestic infrastructure system to move product. I think Brazil has made really good forward advances in that. And it's their how do they utilize both their corn and sugar and be flexible within the blending for their ethanol. I mean, here we're talking about E15, going to E15, and I wrote a story today that they're pushing for the 30% blend. That's where you get consumption. You want to increase consumption of products? Raise that percentage up, because for every percentage increase in that mandate, if you're just corn, it's can increase production. But there's complex issues on that in the U.S. Where you have to have car manufacturers put that as an okay thing to do. It's tweaking the engines. It can be done. In their market development, I think we do a good job in the U.S. on market development, but we might want to look at what China's doing as well. In that we have an inherent problem on the currency side, because with the real, Brazil's currency, they have a hidden advantage there where they get U.S. dollar and they have a weaker real. So maybe there's a program on a differential thing on the currency with our major export competitors. I know that's complex, but it could be done. I'd say we have to throw the book away and look at not only domestic foreign policy in a different way, but also our export policy to see whether or not we can take some steps that will advantage the U.S. rather than being disadvantaged by other countries. An example of this is Colin Peterson, former House Ag Committee chairman, is head of the Midwest Farm Council or something like that, and he uses North Dakota Economist a lot now. I think he and his group are looking at a different type of Farm Bill Title I for the years ahead. That's all I can tell you now. But it includes input cost. Now, I don't know whether he'll be able to do it, but that's the type of thinking to me that we have to look at. We have to be challengers of change. We have not been. We have not been.
That's a great answer. Yes, certainly the large-scale production in Brazil does give them some advantages on cost. Just their returns to scale that they've got down there compared to here in the U.S. And certainly their loan rate, their ag loan rates that are very beneficial to producers and processors, as well as being fairly lenient on forgiveness of those loans is another advantage that they have in Brazil relative to the U.S. system. But I agree with what Jim had mentioned. Just switching real fast to your question on suspension agreements, we just did get those extended for another 5 years. The formula in there is set so that that if, for example, the U.S. has a carry-in that's higher than we had before, they're going to get less access. In fact, this year, if USDA's balance sheet had been correct, Mexico would have gotten zero access this year. They did actually get about 200,000 tons of access, which is really low relative to the million and a half they've been getting. Next year, they're going to be also, according to that agreement, they're also going to get less access. So it is kind of a governor in terms of our stocks relative to, at the beginning of the year, relative to what Mexico's provided in that agreement. It's still working, but ultimately, once you get to zero, you can't go negative on that. So it's been moving in the direction it should be, maybe not as quickly or as fast as folks may want, but the tier 2 imports are still going to continue to flow regardless of what happens to Mexico.
Rob, do you think the suspension agreement can play into whatever basis into the renegotiation of USMCA, or is that off the table?
Well, Jim, as you know, we like to keep discussions of sugar out of the USMCA negotiations. I think those are going to be continuing, and I think both the U.S. as well as the Mexico sugar industry have stood by the suspension agreements. I think they have complaints about how the Tier 2 issue is being addressed here in the U.S. They took their own changes in Mexico recently to increase their tariffs. And I think, at least for the moment, we're hoping to keep those separate as possible.
So, Rob, just as a point of clarification, so if we were to solve the Tier 2 problem and have get to a level where Tier 2 imports are prohibitive and consumption falls, then Mexico is the residual producer, correct? And so we should still be able to maintain domestic production to meet demand.
For sure, yes. I mean, we still don't actually, I don't think it's possible we're going to do it this year, but get up to our 85% allocation for our marketing allotments. But we still have plenty of room there to give out our quota, have our continued increase in production here in the U.S., as long as we can ratchet back on those Tier 2 imports.
Jim, question for Rob, real quick. Fundamentally or technically, do you see anything that may affect the downtrend and pressure on the world market to bring it back up to a level, barring any kind of weather event? Or are we going to stay at these levels and governments are going to sustain their subsidies to continue to dump on the world market and put pressure on it?
Well, yeah, I think, that we've been pointing out that India, Thailand, and Brazil have been over-subsidizing their producers. They've been overproducing, and all that sugar generally ends up on the world market and pushes down prices. I don't see that changing anytime soon. However, what I do see is right now there's a huge reliance on that Brazil crop to set the market price. And as you all know, it's sooner or later Brazil can't continue to produce bumper crops. At some point, they're going to be affected by to your point, some weather event, just like it happens everywhere. And when that happens, there's going to be a significant market reaction upwards, because there isn't like a risk premium built into the system right now, like there may be for the U.S. sector. So I would say right now, with the way the Brazilian, as Jim mentioned it perfectly, it's a flywheel right now between grain production, beef production, and exports, and ethanol, and then you've got the energy sector on the side. So the Brazil beef sector is growing. They need EDGs for that. They're growing more corn to make into ethanol to feed those growing beef herds. And then what does that mean? That means that they've got extra sugar that they don't need to put into the ethanol facilities that are going to end up on the world market. So it's a disturbing trend for the U.S. sugar price. The only thing that can adjust that would be, like you mentioned, huge change in weather for a year, 2 years, that'll wreck that'll essentially adjust the prices upwards on the world market. Or we do something here domestically to help keep some of that, to put a real price on what that sugar is coming in.
Brett's got a question. Go ahead, Brett.
Yeah. Just a quick question. If there were CCC forfeitures in the next year or two in the U.S., what do you think would be the reaction of USDA and the administration?
If what now?
If there are forfeitures of sugar.
Oh, if there's forfeitures of sugar, well, like has been mentioned, you're more than a few cents away, right, on forfeiture. Now, once USDA, I think, gets realistic on their sugar demand, I think they're too high, then I think you're going to hear a lot more about a potential forfeiture debate, okay? So watch USDA numbers. I think, that the anti-sugar people will use that against your program. They'll say no cost program, but I still think you can easily defend it by the pervasive pricing situation and the cost price spiral amongst the entire agriculture sector other than cattle and hogs. So that's both sides. I think both sides will use it as an argument if forfeitures are there, but there's a reason you have forfeitures. So the system is working. That's how I would defend it.
That's right. It's our program. We don't have a Title I, base acre program. The loan program is the program that we utilize to provide financing as well as to provide a floor price. If we have to use our program, just like other commodities, that's what it was intended for. But I guess the situation compared to 2013 and compared to 2000, that's a little bit different today is our price domestically, both on the refined beet side and the raw cane side, is pretty close to that tier 2 parity price that you can bring sugar in for. So normally you would want to see sugar taken off the balance sheet through a forfeiture, and that should prop up prices so that you go back up and you don't have to forfeit. Now the problem being is when you're that close to that parity price, there's really little room for that price to increase until you start bringing in more imports. So I think USDA is looking at the situation of, yes, we know that there's too much sugar on the balance sheet, but if we take it off, does it just get replaced by sugar we can't control? It comes in through the Tier 2 program. So I think that's what they're looking at right now, and it's a bit of a conundrum right now. And as you all know in the room, when we're at that level of prices, it's really not helping anybody. We're below our cost of production at that price, and so it helps in a bad year, but it's not intended to be a year after year type of program.
Rob, what mechanism would they use or would you want to use to increase the factor for Tier 2? What approach?
Well, that's a great question, Jim, and I know a lot of folks are looking at that.
Could that come in by Congress?
Well, you tell me when Congress is going to take action on a trade bill, and I'll give you an answer.
Trade bill, but it can't come in a supplemental bill, you don't think?
Well, I think I'll let Jim answer that question.
We're looking at it. There's lots of work being done on all of those things, folks, just from a perspective of managing things in Washington with regards to supply and demand and all those things. As members and producers, members of the American Sugarcane League and producers of sugar in America, what you should know is all of that is being considered at the highest levels and very diligently. You know, I've often said that Louisiana, being America's first cane producing or sugar producing state, has been dealing with tariff issues since 1805. When Louisiana started producing cane, sugar in America, and we started fighting off imports in 1805, and we've been able to successfully do it since then. I don't see any reason why we're not going to continue to be successful in finding our way through this stuff. So Jillian, I saw did you have a question or you got asked?
I was just thinking, you mentioned all these countries where the demand's going down, the negative demand, but there are many countries in the world where it's going up. If you look at the production of sugarcane, world production, it's actually slightly going up every year.
That's right. That one chart I did show was per capita consumption. It wasn't necessarily total consumption. So you're right. We are seeing each year we're seeing slightly higher demand worldwide, about 180 million metric tons, and production is either 184, 179, depending on, that's where we get the surplus or deficit from. But you're right. Each year it does. As long as the world population continues to grow and as long as we see a wealth effect from a lot of those countries, you're going to see increasing consumption of sugar in aggregate. The chart I had showed was that was a per capita chart, so that'll be more illuminating when you see population growth slow or flatten.
Any other questions for more, Ricky?
Yeah, Jim, the question is, if the Supreme Court rules unconstitutional on the tariffs, do you see a direct impact on input costs, or what do you think the commodity prices do after that ruling?
Well, depending on what the Supreme Court rules, it could be a very complex ruling, some people tell me, in that they could say, like on the existing tariffs, that from that date forward, in other words, the administration would not have to refund. And that would affect a lot of pending cases as well. Don't know about that, but that's a possibility that we have to look towards. The bond market is looking to this too. This could have big financial impact because of that's a cushion of a lot of money there from a debt situation. So there's a lot riding on this, and the Supreme Court knows that. Most of the lawyers, one good thing I'll tell you about using artificial intelligence is that I don't have to talk to as many lawyers as I used to. I just ask AI, and it's probably a much better answer than I get from lawyers, and it's summarized too. But the vast majority of lawyers I've spoken with think that the administration will lose it. However, Roger McGowan, a noted ag lawyer, says that he thinks the conservative tilt on the Supreme Court will tilt toward Trump in this one. That's a minority viewpoint. What I'm trying to tell you is no one knows for sure, and we need to know the verbatim ruling to see the ins and outs of it. But if he loses the easy way to do tariffs, it's going to have some impacts in the trade policy arena and the tariff fundings. But that's about all I can tell you with any sense of accuracy. We need to see the specific ruling.